Thank you very much for inviting me here. It's actually the first time I participate in person. I've been in a couple of virtual sessions with the Lausanne Academy and always very much enjoyed those discussions. So my presentation, I think, have been kind of teed up perfectly by the previous speakers. You know, I spend most of my time now thinking about the world looking, how it looks from the emerging and developing world. Obviously a bit from China, but actually more from the rest of the emerging and developing world. And there is this saying that you heard in African saying that when the big elephants dance, the grass suffers. And I think that's you know what I think we are seeing at the moment, that a lot of countries are being at the receiving end of some of these challenges of globalization and these emerging divisions across many aspects of the economy. So I'm going to focus on that, and I'm going to try to give you a sense of what the world looks like from that perspective. So I mean, the first thing is that, and it's been mentioned, and Hi Joe, for example, gave some of the latest projections from the IMF and the World Bank. But something that wasn't emphasized so much in the public reporting from the latest assessments by the IMF was the fact that actually they retrospectively went back and looked at the extent of scarring in advanced economies and in developing economies and emerging economies. And what they found was that actually the scarring was even less than they had thought before in advanced economies, but it was considerably larger than they had previously estimated for emerging and developing countries. And I think this is coming out of COVID. I think this is something that we need to reflect quite deeply about. Obviously there was the whole vaccine debacle, and we will all remember how this in the end was playing out in terms of political economy, and maybe that's something that we will maybe experience again in different areas. But we also saw, on which I think the main reason for this difference in the degree of scarring was the lack of fiscal resources to respond to the shock that hit these countries, or hit us all during COVID. Some countries had ample resources to respond, and again, that's come up in several of the presentations. And also, I think it tells us something about the level of resilience in these economies, that they were hit by shocks, and they will be hit by shocks. This was kind of a nature-related shocks, the pandemic. There will be more pandemics. And we know that these countries are at the receiving end of climate change and loss of biodiversity, shocks coming to some extent from climate, but also from other factors. So this lack of resilience could potentially mean that we see a lower growth path in these countries. And of course, it should be the other way. We should expect these countries that are at lower levels of income to grow faster, and we would hope that this would lead to convergence. But taking together all those factors that I now mentioned, and I will come back to how I think about it across some of the aspects of growth in a minute, but I think we might have to prepare ourselves for a lack of convergence and possibly even a divergence, and which would have, of course, long lasting impacts on many aspects of global of the global economy. So I talk now about the experience from the shock of COVID and potentially other shocks. We all know that these countries are facing very different constraints from countries that were in the same position maybe 20 or 30 years ago, that they are facing new constraints. And clearly the environmental constraint is a very real one. And not only were these countries not part of creating this problem, but they're also now, of course, at the receiving end of the impact of climate change. And if we look at the resources that go into investments to address climate change mitigation and adaptation, it's very, very heavily weighted in favor of advanced economies. And as we know, many of these countries are now very considerable contributors to global emissions. So we need to make sure that these countries also receive these investments. And of course, that's something that I work on a daily basis. But it's when you look at these aggregate numbers, it's quite discouraging. We need to start thinking in different terms. There are also, I would argue, quite different social constraints. And some of these come out of the things that have been discussed already in these sessions, the outcome of COVID, these long-term shifts in terms of inequality in the global economy. There was a period where, of course, there was a lot of convergence, very much thanks to what happened in China, but also throughout much of developing Asia, we saw very positive developments. But that has now slowed down considerably. And if we look at these sustainable development goals, we lost many years of progress, and we are not on track on almost any of those goals now. So this is another thing that putting pressure on the development models of these countries. I already mentioned the fiscal constraints that these countries are facing, very significant fiscal constraints. Not only did their debt levels increase on average 10 percentage points, but there is also and of course before that a debt load that they will have to deal with, and will limit their ability to respond to future shocks. And I would argue, we talk a lot here about, we had a very interesting session this morning on AI, and of course this is super exciting what's happening in that space. But when you look at it from emerging and developing economies, many developing economies see very little possibilities of benefiting from this. And I'll come back to the main kind of window or lever for these economies to join this development has been through the global value chains, and I will come back to that in a minute. But that's been, that option may not be as available as it has been in the past. So, but this had a rapid pace at the global frontier is an issue when you're trying to approximate it or move towards it. And here again, I'm using some examples from AI. It's again, if you look across the whole field, but also looking at the green technologies, for example, with the incredible exception of China, we see very little innovation, green innovation in emerging and developing economies, and that's where the productivity gains from green innovation, the job creation from green innovation is not happening in the emerging and developing world. And now I'm going to come to these. Of course, what's in the background of all this is geopolitical fragmentation and the fact that, as some of you have alluded to, countries are now being forced to choose sides or to orient their trade towards one or the other major economic bloc, and that's something that also constrains, or at least somehow puts it puts constraints on the growth, but also reduces the ability to have certain benefit from certain technologies and so on. So here is maybe what I think captures a bit what we maybe see in terms of evolution of trade. So this is China's trade, and with advanced economies in the upper graph and emerging economies in the lower graph. And we see that actually the world is very much dividing, and we've spoken about the tariffs on electric vehicles, on new green technologies in the US and now increasingly in Europe. A lot of this will now have to go to, and it will benefit many of the emerging and developing economies, but it's a bit, again, it does impose some constraints on these economies as well, what they can access and not. And I was going to show here, so here's another, I think, interesting slide, which shows that, yes, the Chinese trade has shifted towards emerging and developing economies, but actually the tension is still with the Europe and the US. That's where China has its trade surpluses. So even though we have seen this shift, the tension does not really go away, and we will have to somehow live with this going forward. And of course, when we look at the development prospects and sort of global integration and compare what the world looks like in 2000 and what it looked like in 2020, and you can see that this is an accelerating trend, or at least a growing trend. And what does that mean in terms of trying to solve some of these global problems of climate change and biodiversity loss? And so I mentioned now the global value chain. So that's been, for the last 20 or 30 years or so, the predominant pattern there has been a shift in the relative importance of this for emerging and developing economies. Role in this has increased. And it's not just a China story. It's actually something that also is true for the emerging world overall. And so this has become a lever of development for so many countries, and it's this fragmentation of global value chains allowing you to enter with a much smaller part of the value chain, and that is part of the development option that is now being severely limited by the threats that we see to the globe. Yes, yeah. So these are, sorry. So if you look at across all of Asia, even India has actually increased its participation in global value chains. Malaysia, Indonesia, Vietnam.
Sorry, my question is, you have this other country category, it's going down, right?
Yeah.
So what are the other countries here?
So
on the last page. Emerging markets are going up, China is going up, developed countries are going down, but there's other countries are going down, right? On the previous page.
Okay.
Previous page, not
previous
this one.
page, okay.
Yeah, that going down, others. What are others?
I would presume that these are, I should have, what I'm trying to think of what others could be, because it's not.
I'm just curious.
It's not advanced economies, and it's not emerging economies. Probably it's not Eastern Europe. Others, I don't know.
It's okay.
I should know, but
just
surprised. I didn't. But it even doesn't. It's sorry about that, but it's a few years since I put together. Sorry? Which country? Yeah, so I think that's
developing countries that are not emerging.
So countries that are.
Emerging.
So,
right.
This is the category we have, especially in reference to the emerging market.
Right.
Yeah.
The ones
I think that is the that is. I think that. I think that is the
right. Not the emerging yet.
Yeah, I think that's the answer. I put together this a few years ago.
Maybe
actually.
Africa, something like that.
But anyhow, so that's I think what I had focused on has always been
Sorry,
looking.
I disrupt your pace.
No, it's perfectly fine. So I'll send you the answer. I guess I should come to close, but what I think is important to notice here is that there are many ways in which you could join these global value chains. So China has done it in a way by, upgrading, taking more and more of the intermediate goods into and moving out a lot of low-skilled activities. India, on the other hand, has sort of realized sort of higher value added by sort of functional upgrading, introducing IT and so into some of the service sectors and so on. So the point here is just that there are many options for countries to join, but if this is overall blocked because of the introduction of these kind of geopolitical fragmentation, these options are going to be much reduced. And here is just an attempt to show the diversity of different approaches, and I don't want to go into the details here, but it's just showing that countries have been able to choose very different approaches, how they have chosen to develop their global value chain or their participation in global value chains. And I think what we are talking about now is how can these countries respond to this? And of course, a very key factor here is the ability, the state capacity, the capacity that these countries have to respond. And probably the greatest of all challenges to state capacity is the climate, the net zero transition. And here you can see that in terms of climate pledges and state capacity, they are very strongly correlated. So the more ambitious climate pledges have been by the countries with the most state capacity. So many countries in the emerging and developing world have great shortage of state capacity, also less ability to deliver on the climate change. We also have a lot of variation when it comes to can you see this? Or well, you can see it on the other one. So a lot of variation in terms of infrastructure, and a lot of, for example, the net zero transition is really about greening infrastructure, whether it's about the energy, power, transportation, or digital infrastructure. And so there's many areas that these countries can potentially be present in. This is different renewable energy and minerals, and unfortunately it's not too legible, but you have rare earths and then many other variants of this that these are potential opportunities for these countries if they can be part of global production collaboration. And also there are opportunities to catch up when it comes to green innovation if they are allowed to enter into these value chains and participate. A lot of these decarbonization be driven within these value chains. And just maybe end with this picture. So this is a picture of what we call biodiversity integrity, and it just shows you that the darker here, the more the higher the quality of the ecosystem, so to say. So the more intact it is, and you can see many of the emerging and developing countries have very high degree of natural capital and very high levels of natural capital. And if we can start valuing that natural capital for the benefits that it brings to climate change mitigation, for example, or to many other aspects of air purification and so on, then these are opportunities for countries to get lending on a much cheaper conditions, be able to maybe do some of these exchanges of debt for nature commitments and so on, climate commitments. So this, I think, is something that gives a lot hope and opportunities for emerging and developing economies. So let me stop there. Thank you.